Hey guys, welcome to this week's podcast episode. And I've got a bread and butter guest for you today, Wyatt Simon. He's a professional in the real estate industry. And for the audience out there, which is the high income earners, high net worth individuals, the doctors, the lawyers, dentists, looking to use real estate for either cash flow, cap appreciation, tax benefits, this episode is for you. So, Wyatt, welcome.
Yeah, Chris, thanks for having me. Excited to be here.
Yeah, I know you've got a really impressive background. So talk about your background and how you got into real estate and what you do now.
Sure. Well, so when I started, I'll take it all the way back to loving parents, and they provided a good life for us. Unfortunately, they lost a lot of their portfolio in 2000, and they lost another big chunk of their portfolio in 2008 when they sold at the bottom.
Mm.
And so living through that, it kind of formed me. I was like, okay, there's got to be a different way because they did the Dave Ramsey thing. They saved money, and we lived way below our means. The answer was no to most things, but they never really got ahead, and they retired very late in life because of it.
Mm.
And so then I came across a book called Rich Dad Poor Dad, which I think a lot of people have read, I'm sure, but that taught me how to have assets generating you money while you sleep. And I was like,
Yeah.
I want that. But the problem was I was 22 at the time and broke,
Mm.
and I didn't know how to buy assets with no money. So the first thing I had to figure out was how to use finance. And I'd say my biggest thing of my story is I'm the kid that took a 200K line of credit and turned it
Uh,
into a $20 million real estate portfolio
yeah.
using finance.
And we can, like I said, my financial freedom journey also started with Rich Dad, and that just opened my eyes to what was really going on. And once I read that, it was like the media, school, government, all these are just kind of brainwashing us. So, keeping us poor. So the one thing is talking about is so I love this idea, and so for this 200K line of credit, talk about like, was what got like your credit? Was it your job or your profession? Like, why would someone give you 200K to go invest in real estate?
Great question. Well, I got fortunate. We'll say that. So I didn't know. I learned about this thing called the BRRRR strategy. Maybe a lot of people have heard of it, but that's when you buy a property, renovate a property, rent a property, and then refinance it and repeat. And the reason why that strategy is so important is because it allows you to take a little bit of capital and recycle it to pick up these assets. And so that was my ticket. I was like, okay, if I can just do this with a little bit of capital, then that's how I can buy these assets. And so the first person I called, I said, Mom and Dad, I know you guys don't have cash, but you do have your house paid off in cash. Would you allow me to take a line of credit against your house? And they said, absolutely not. There's no way we're letting our son do that. This is our life. And eventually, 9 months later, they said yes. After I continued to educate myself and learn about the BRRRR strategy and continue to go to these real estate meetups and connect with people and show them that I knew what I was talking about, eventually they took a chance on me. And I was able to then buy a single family house, use the strategy. I mean, I don't know how long, I won't get too much into details, but everything happened at that house. Like I threw my back out. It took me 6 months. I rehabbed it after work. I did all the work myself with a buddy.
Uh,
Uh, and then eventually we fixed it up, refinanced it out and rented it. And that was proof of concept.
and like I said, it's very capital efficient. So it's not just sitting there, just accumulate. It's you're able to do stuff with it. So, the next question I have is, so you had, you were able to, what I really find is this idea. What's the greatest mindset shift to go from a W-2 job to building a $20 million portfolio? I'm really curious about that.
That's a great question. I think it starts with your habits. So I like to I like to say to my students, I do coach people. There's really three things. I'll say this. So to be successful financially, right? There's other things in life, but to be successful financially, you need to play defense, you need to play offense, and you need to have investments. Playing defense is Dave Ramsey 101, right? Like live below your means, have a budget, start there if you don't, right? Two is play offense, and that's the W-2 job. for most people. For me, it was the W-2 job. Maybe you're a business owner and now, you're trading your time in, time out. That's your offense, and stick with that, like crush that. But then on the side, you got to have investments as well, right? And
Yeah.
for me, putting stuff in the stock market where I saw it cycle and not go well, that was not something I wanted to do. So I wanted to have control of my investment. And that was why I picked real estate, building some other kind of wealth in the background. And you really got to have all three for that. So to answer your question, how do you do that? Well, for me, I was doing all three for a while, right? I was playing defense. I was working a W-2 job for a foundation company doing sales for almost 4 years, making a good living. I was good at it. I got really good at it. And then on the side, I was buying 20 to 25 houses a year. And then eventually I built up a nest egg where I said, okay, I've got 6 months worth of living expenses. The business is starting to really take flight. I will leave this W-2 job and replace it with starting a business.
Yeah. Yeah. And so my next question is, one of the common objections I hear from real estate investors, they say real estate is very inefficient. It's big, bulky, slow, inefficient. And you talk about insurance costs, you talk about like maintenance fees, all these costs are going up, so the cost of holding that is going up, right? And then you have to, on top of this, you have renter liability now, you have squatters, they have more rights than you do as an owner. So is there another asset that's real estate, tied to real estate, that's easier? Like, is it a REIT? Is it a syndication? Because most people I talk to, they say you do not get rich by becoming a landlord. So talk about that.
Interesting. Well, I would beg to differ, but I'll say this: like Warren Buffett says it best. I'm from Omaha. Warren Buffett's the oracle, right? Risk is not knowing what you're doing.
Mm-hmm.
Right. So if you're looking to invest in an asset and become a landlord, if you don't know how to be a landlord,
Yeah.
you're gonna go through the learning curve and it's gonna suck. And I can tell you, I have done it. So, like it basically, put it this way. If you're listening to this and you're happy, you've got your defense down, you've got your offense down, maybe you're a high performer, you're a doctor, I'm assuming your audience is a lot of that based on what you've told me. You guys are killing it on the offense and defense, I would assume. So really it's just the investments. Like where can I make an investment that's going to be the least amount of intensive time and effort and still have a great return?
Yeah.
Syndications are one of the best areas for that, because you're partnering with experience. So you don't have to go through the learning curve. You don't have to do the work. You get all the upside of the real estate, but you're not having to pay the downside of it, the operator.
Yeah. Yeah. Thing I hear is the operator, they go missing or they go bust, and really it's kind of the risk, the operator is kind of like, I mean, I don't want to say they're taking no risk, but they have the capital. So one thing, talk about the market, the economy, where I hear real estate, especially multifamily, is struggling a lot. How do you see the real estate market playing out, interest rates, just kind of your big macro framework and picture?
So big macro, we still have a housing crisis when it comes to the single family market, right? Everything comes back to supply and demand. Right. And so if we have a lack of supply and still an increase in demand, there is going to be opportunity. Right. So real estate is still looking good on that front when it comes to supply and demand.
Mhm.
Obviously, interest rates affect things. And I personally don't think we're going to go down in interest rates anytime soon, especially with where inflation is. I think we're going to stay here, maybe even go up a little bit. But is there money to be made in real estate? Absolutely. And so what I think the most important factors are is that, number one, you're looking at the operator and vetting them to make sure that they actually have the experience and can perform. And number two, that you're going after value add opportunities where you don't have to bet on whatever's going to happen macro wise, but you can actually force appreciation by taking over a mismanaged asset or an underperforming asset and making it perform with a good operator. I think that's the sweet spot.
I highly doubt they're gonna change interest rates much. They made, kind of this June period is kind of that that kind of the looming deadline. It's going to be really interesting. And then so talk about this, so single family, but especially after COVID, commercial is not, and then multifamily, and then the other sector that I found really interesting was industrial and storage, and there's actually niches within the real estate that are doing well. I think also retirement homes. So I'm not sure if you have that experience, but I'd like to hear your 2 cents.
Yeah. Well, I don't. To be honest with you, I've done hundreds of single families and I do multifamily units and we own a property management company, so we service that. I don't know what I don't know yet. And yeah, I did do a storage facility and I can say that I think there is benefit to that. However, I didn't do it at scale. I bought like a little 43 unit storage facility and I started chasing people for, like $40 rents. And I was like, I have late fees that are more than this. It's just not worth the time. So I think if you're going to do something, you got to do it at scale and in those industries. That's my limited 2 cents take.
The other question I have is because I invest in real estate too, and one thing that is always a risk, like a big concern to me, is property management, and it's always like changing, and there's always problems. So why would somebody start property management?
Because they want to go the hard route. No, man, I do not. I mean, if you're going to be in real estate long term, then
Yeah.
it's worth it because it's one of the main factors. I think when it comes to real estate investing, operations are 80% of it. And so if you don't have the operations in-house, if you're outsourcing operations,
Yeah.
you're putting a lot of risk in someone else's hands. And sometimes property management companies, third party, can do good. But a lot of the times, the ones that do good end up having employees turnover. And so after 2 or 3 years, now you go through the cycle of, oh, we got to fire them and transition to another one. And
Yeah.
then when you transition, it seems like it's a 50-50 shot if that other one's going to be good anyways.
Right.
And it's a painful transition. So why did I do it? It's because I knew no one else was going to care about it like ourselves. And honestly, I had a bad property management company and we fired them. We hired another one and they weren't performing. And so eventually we said, all right, if we're gonna raise capital and do it, like if I'm gonna actually raise capital, I have to be able to look at you in the eyes and say, I can make sure this goes well.
Yeah.
So,
Yeah.
yeah.
The other question I had was the new, like, there was the NAR, there was a lawsuit, that settlement where basically now real estate brokers' commissions are going to be cut in half, or pretty much. So if you're making really good, your income's essentially half that. So and again, I'm not sure if you can speak to this, but is it beneficial to be a realtor these days? With just kind of, seems like everything is trying to disintermediate and just kind of push out the middlemen. What are your thoughts?
It depends. It depends. So I'm very familiar with this. I actually just got my agent's license recently, and I was extremely against it for the majority of my investing life.
Yeah.
The reason why I got it is because there's so many ancillaries that unlock because of it. There's a lot of deals that happen off market, pre-market, and when you can get your license and run in those circles, it just opens up a lot of opportunity. So I think there is opportunity to get your license. It just takes some time. Do you need it as an investor? Absolutely not. I built over 20 million without it, so you don't need it. To speak specifically to the NAR and what happened is now I think it's really great for investors, and I think it's going to be great for high performing agents that know how to negotiate. Because what they did is they basically said that now real estate agents don't have the listing seller does not have to pay a buyer's fee. And so now whenever a broker goes to list a property, they used to say, hey, I'll list it for 6% flat or 4.2% flat. And they would pay half of that commission to the buyer's agent and they would keep half of that commission. Now, when they go to a seller, the seller has the option to pay both or to not. And so it'll be very interesting to see how that goes. But what I think this will do for the industry, and I'll speak locally here for some local knowledge. In Douglas County, we have 2,400, a little over 2,400 licensed agents in our county of Omaha. And of those licensed agents, there's only 156 of them that do over 2 million a year in gross revenue, which is, or in just market share. So that's not their take home, not even close, which basically means there's, almost 2,000 agents that are not hardly doing any volume and just have their license.
Yeah.
Well, I think what you're going to start to see is a lot of these agents, and I'm sure it's similar in other markets, a lot of these agents are going to lose or are just going to stop. You're not going to see people getting their license to sell their house or their mom's house. Like people are just going to stop doing that, which means the true good skilled agents are going to make more because they're going to capture more market share with what's going on, and it's just going to kind of eliminate the litter.
So talk about the buyer's agent. So how are they going to get compensated? Is it going to be on the buyer side, or is it or they have to? I'm sure someone has to pay because no buyer's agent is going to work for free. I mean, how will they get compensated?
Right. So now they get compensated by their buyer, and so they either have to work with a buyer that's willing to do that, or they only show houses that are agreeing to pay a buyer's fee, which means if you list without a buyer's fee, then your house is so much less likely to be sold because it's going to get a lot less traffic from the people that are quote unquote working as a fiduciary for you.
Interesting. Yeah, yeah. That's going to be really fascinating. Or a bunch of agents are going to go to the listing side because that's where all the money is being made.
And I think that's where the majority of agents like to get to anyways.
Kind of my final question is, you've seen, these, like the whole process is very, I don't want to say antiquated, but it's very slow. And in some reasons that's very good. But, talking about because I know with like stock market transactions, now everything's digital. And I think they're trying to make like real estate transactions digital, like and make it easier. What are your thoughts on that? And, simplifying the whole, process. I don't know if you have thoughts on that.
I think it's great. I think we should, continue to streamline as much as possible. I mean, DocuSign was amazing. Recently, or I guess maybe as a year and a half ago, I attended the blockchain real estate conference summit. And so I really believe that blockchain will change title companies where now we don't have to sort all this crap and it's just going to be on the blockchain and it's going to be very easily transferable with no objections and there's no more recourse or title insurance. Like it's going to change the industry.
Yeah.
It's just a matter of time before states start to adapt it, but I'm definitely behind it.
How can people contact you? Because you seem very innovative and forward thinking, and especially with these with these new developments. And how can people reach out to you? Because I know you also do coaching too.
So I'd say two ways. The best way is follow me on Facebook. You'll see all my stuff. I'm very active on Facebook. I do have a website. If you're wanting to get coaching on real estate, you can go to WyattSimon.com. and check out what I have to offer there. I've got a ton of free resources if you're wanting to get started and you want to use that. And then maybe if you're a more high net worth individual and you just want to invest passively, then my company is fcequitypartners.com. Stands for Full Circle Equitypartners.com. And you can schedule a call to see how we can help.
I really enjoyed talking to you because most of the individuals, they're conversing, and so it's just kind of good to get the nuances. And so all of Wyatt's social media links will be in the show notes, and be sure to give him a like and follow, check out his company, his resources, and see how they can help you. And thanks so much for coming on.
Yeah, thanks for having me on, Chris. Appreciate it.